Hi there, a very good morning, good afternoon to all of you, depending on where you're watching me. This Simply Stocks, and I'm live with another live session with you all. And today's live session will center around one of the sectors that I feel and I'm very bullish on. And I'm invested into one of those stocks as well. So that's a disclaimer, but we'll discuss about that in detail. Plus, I'll answer your queries and we'll have a discussion about this volatile market that we are seeing, in which the market is yo-yoing between 17,800 to 17,000. 400 levels. So, Mr. Pawar, a very good afternoon to all. I hope more people join in so that we get going on this session in earnest in the next 4 5 minutes. Before all this, before the talk on markets, before the talk on that sector and answering your queries, uh, on a lighter note, just a little bit of discussion about sports. So the US Open has begun and begun in all earnest and doing pretty fine with some of the seeds going through. One or two seeds have fallen behind, but most of the seeds are safely through to the second round and even the third round of the US Open. So that looks good on one end. In cricket, we have seen India winning against Pakistan, which has been a great relief after what happened last year, probably a year back in the World T20. So this time around, the better team prevailed and prevailed in a big manner. Yes, there were some hiccups, but we are seeing that our top three, Rohit Sharma, Virat Kohli, and KL Rahul, has not been performing to an extent where uh, the things look that good. So the top three has not been performing that well. I think there is an issue with the voice. I hope now I am pretty much clear with that. So once these three, say Rohit Sharma, KL Rahul, and Virat Kohli get going, I think we could be in very good shape for the World T20 that begins on the 22nd of October. So the thing is, we have to get ready for that, and that's why all the experimentation that is going on with Rishabh Pant playing yesterday and Hardik Pandya sitting out, just take care of his health because of him being one of the top all rounders. So we'll see how things go by. It looks like that we are going to have another India Pakistan clash this Sunday if Pakistan beats Hong Kong, which looks highly likely on the cards. Sri Lanka play Bangladesh today, and I am hoping that Sri Lanka do prevail. Although Bangladesh is a tough side, so this is going to be a very close encounter. Whoever wins goes through. So it will be interesting to see because Afghanistan have beaten both the teams. So Afghanistan is through, India is through to the Super Force. It's going to be a very interesting Super Force, and even better, you could say the final, hopefully on the 11th of September. So looking forward to the whole of the tournament. We'll definitely talk about the stock market. I'm just waiting for more people to join in, Bharat. So I have no issues talking about other things as well, just at the beginning. So about the stocks, so if we just come back to that, what I want to say is that this was pretty much evident and on the cards as to how the performance of the market would be with the kind of you can say volatility we are seeing in the US with the Dow Jones. But uh, overall, I feel that we are in a much better situation than what we were, say, about 2 months back, fundamentally, because even if after the Jackson Hole summit, even if there is a 75 basis point rate hike that has been told by the Fed. So, whatever movement or whatever you can say downside that is going to come in, it could come in the next 1 month. We could go to 17,000, 16,500. We could may not go there, but I think from October onwards we could be in a much better space, and we could be in a situation where the market, at least the Indian market, and we are concerned by that, should perform because the festive season will be upon us from October onwards. So it's just a 1 month, I suppose, of extreme volatility that we have to face. There could be one more dive in the market of 200 300 points nifty on a particular day, except for the gap downs, and then we should be fine. So 17,000, in my opinion, is a strong support. very difficult to see 17,000 gets broken unless the FII starts selling big time again, which I don't think may will happen that soon, because we saw what happened about I think it was yesterday, when the FIIs bought into a day before yesterday, when the FIIs bought 4,000 crores in the market, in the Indian market. So that is extremely positive, and we have seen what happened today. So the market fell in the morning. We went to below 17,500 levels, and immediately recaptured those levels. So as I talk right now, the market is around 17,550. It tried to go below 17,500 again, but again recaptured those levels. And what is more heartening to see is that better mid caps and small caps have started performing, and have and are doing much better than what they were doing say about 2 months back. So it is a more broad based rally that we are seeing in the market, and that augurs well for all of us if we are invested, fully invested in the market. That also tells you one thing, that if you are invested all the time, don't ever run away from the market. If you are into the stock market, uh, try not to move away, because even if nothing works, what works is time. So if you give time to your stocks, and your stocks are even half decent, then you're going to make money in the long run. So you have to just bide your time, and bide the, or just glide through the difficult times, and you will end up making up money. uh, at least you should be in the market from a perspective of 3 years. Even if you make money in 3 months, you should think in your mind when you buy into a stock that you are buying it from a 3 year perspective. That's what I always do, even if I buy a stock for from a trading point of view. And then other things do come up, like stop losses, etc., as a trade. But you analyze companies fundamentally from a 3 years perspective. So that's my point. So the market, in my opinion, 17,000 strong supports, and I see that the market may hit new highs by the end of the year, and should go much higher than that in 2023. The signs are that these FII buying, or this FII buying that has begun, should continue for at least 5-6 months continuously. We'll see how things pan out in US. One more 75 basis point rate hike, maybe another one in December. But hopefully, after that, the rate hike cycle will be on the downturn. So there could be 25 basis points hikes, and eventually no hikes whatsoever by the middle of the year. That's what I assume. So next 5-6 months, FIIs might buy big time here, and by the time in US there are no rate hikes, we'll see the market go down by middle of next year. So that is what my assessment it is for the market. If you get a chance that you get a market around 17,100, 17,000, and you have some cash, do deploy that into good quality mid caps or large cap companies. Avoid smaller companies, they have run up big time, many of them. So small caps, you have to be extremely careful and analyze very well in order to get into them. So analyze them. Any company that is less than 10,000 crore, in my opinion, is a small cap company. And in those, you have to be very shrewd and extremely precise as to which one you pick in them. So that's the call on the markets. Coming to the point on the sector that I like, and I have not talked about it for a while, about this sector. See, the retail sector, the garment sector, which are into branded garments, they look extremely good. Some of the stocks there, I'll mention stocks here, but again, a disclaimer that in one of them I'm invested. Plus, the point here is do your own analysis and then invest into them. But these three companies, these are top class companies, very good management, and I am looking at a 20 to 25% upside over the next 4-5 months in these companies. The first one, this is not particular garment or clothing company, but into retail, and that is DMart. I feel DMart has had uh, has gone through the whole circle over the last 1 year, hitting 5,900, then hitting 3,100, and now coming back. I think if you get DMART around 4,300 to 4,500 in that region, just about say a 5-7% decline from these levels, very good levels to accumulate. It could be possible that by January, February, it could hit 57, 5,800, closer to the all time high that it hit last year. I think this season, especially the January, so the December quarter and the March quarter, would be extremely good. So if you are able to invest over a 6 to 9 period into it, a good 25-30% upside from these levels are possible. And yes, it has run up. So wait for major declines, wait for bad days in the market to accumulate the stock, rather than buying into it when it is really roaring or running up. The second stock, in my opinion, that I like here is Vedant Fashions. I think Vedant Fashions, although it looks extremely expensive, but the kind of numbers and margins it is producing with 50%, and I've gone through their uh, a little bit of their con call as well, that they are confident of maintaining 50% margins for at least the next 2 quarters. I think the numbers could be extremely good, because remember that FY20 and 21, especially the festive season, has not been that great for most of the companies that are into the wedding field. And Vedant is directly into it through Manyavar. So I think this time around, from October to March, the numbers could be extremely good. Again, the September quarter could be up and down. But October to March could be big, and because of the wedding things, and because of the fact that we are in most of the places here in India, we are now thankfully Corona is a thing of the past. So the pandemic is way behind us. So hopefully it could come out with very strong top line and bottom line numbers over the next 2 quarters. So that's another kind of retail space play that should end up doing well. And the third one, which has come out with profitability after a long time, is Trent. I think Trent around 1,400 looks good. If you get it around 1330, 1350, even better on any 4-5% dip. I think over the next 6 months, another 25-30% upside possible. Again, Trent in the same space as DMart, but slightly different, with clothing as their main foray, or their forte is more into clothing. So I think it should also end up doing extremely well, because people will go out, and people will go out to malls and to shopping centers, etc. uh, with the kind of you can say situation we are in. And 3 years, it was 2019 October to December when such festivities were seen. I'm hoping for uh, big you can say sales growth in these companies over the next 3-4 months, because the last 3 years have been completely wiped out. So in my opinion, these three companies, in my opinion, looks extremely good. Danish, so Nykaa is not quite into the retail space, and that's why I'm not talking about it. But yes, Nykaa is also a play on the festive season, on the wedding season, and I've talked about it on number of occasions. At these levels, look extremely good. But since I'm strictly just talking about the retail space, so I think DMart, Trent, and Vedant Fashions are three of the major stocks to look at, with the kind of numbers they have produced in very difficult circumstances. I think this time around, when the season arrives and things get going, I think these companies should end up doing well. Now, when to buy them is a difficult thing, because these stocks have run up. I've seen Vedant being around 1170, 1180, now at 1280. We have Trent, which was struggling at 1200, now at 1400. We have DMart struggling at around 4000, now at 4500. For some reason, I feel that the opportunity to buy them at say 8-10% lower from these levels would be extremely difficult. I don't see these stocks correcting that much, but a 4-5% dip in all of these companies could still come in. For example, Vedant Fashion opened at around 1240, if I'm not wrong, 1230, 1240 today. uh, so that was time to accumulate. It has run up from those today itself. So on any gap down, look at these companies and go ahead and buy into them. hold them over the next 6 months, throughout this season till probably Holi, and see how things pan out with numbers for the December quarter, and then take a call. I think you should be able to make decent amount of you can say percentage gain on these stocks. Let me know what are your picks in the retail space apart from these three. If I've missed on major companies apart from these three that you feel that can do well. All right, so I'm ready to answer your queries for the next 7 to 10 minutes. You can use the super chat and super sticker feature that will help me grow the channel. That will help you also ask me questions and seek out answers in greater detail. So Joseph, endurance tech do look good. In fact, the whole auto space look good for me. And finally, I can say that the autos are coming back from a 4 year hiatus. I thought that 2022 could be big for the space, but it has not been. So I think 2023 will be huge for the auto space. Endurance Tech, Jamna Auto, these are decent companies. GNA Excel, for that matter. These are companies to look at. Sona BLW as well, with the kind of consolidation it has seen, although slightly expensive. The companies, even if you take KPIT, and a disclaimer, I'm invested into the company, but even if you take KPIT rather than an IT company but an auto company, it also looks good. So there are companies in the auto ancillary space which look extremely attractive. We have from the bearing space also companies, fastener space which look good, say Sundaram Fasteners, to that extent, and a small company at that, a competitor of Sundaram Fastener, that is also looking pretty good. So these are the companies to look at, and Endurance is a top class company in that space. Acrescel, again a disclaimer, I have positions in here. Yes, it's a good stock to buy into from a 3 year perspective. The kind of numbers it is producing, I think an EPS of around 50 rupees is very much possible by FY25 or so. So if you say 3 years, I think the stock should head towards 1100, 1200 levels from a 3 year perspective. Uh, uh, so yes, it is a buy, but it would be more prudent to buy around averages or moving averages, which is around 670, 680 would be good levels to buy into. Okay. See, IT sector will only recover when UK and US recover, especially Europe and UK recover, because there is a lot of exposure for most of the IT companies like Mastech, etc., to UK, and that is where the most of the problems lie. And so it will take at least a couple of quarters, I feel, from even from here on in, for the companies to recover. Maybe the stock prices may recover earlier than that, but numbers will kick in from only from FY24 onwards. So that's why, because the market believes that the next 6 months could be bad for IT, that's why nobody's buying into it. Otherwise, companies like even Happiest Minds, Mastech, L&T Infotech, LTTS, etc., they are pretty good to buy into, but you should have a 2 to 3 year time horizon. Okay. See, Bharat, Berger Paint has not done that, probably because Asian Paints and Pidilite are the market leaders in there. And that is why I have kept on saying, and I've kept on reiterating that whatever you buy in whichever industry, you buy the best. And that's where you'll make very good amount of money without any stress. When you buy the second or third run company in any industry, then it's a 50-50 chance whether that will perform or not. But a top level company in any industry, be it anything, uh, will perform once that industry performs. And that's why Asian Paints and Pidilite gets the nod. They have the best margins, and especially the management quality is top class there. I'm not saying that there is any issue with the Berger Paint management, but the way these companies, Asian Paints and Pidilite, have produced a 20 to 25% profit growth year on year for the last 30, 40 years. I'm not talking of 3, 4 years, but 3, 4 decades. That is why the premium that is given to them at over 100 times, they keep on running, and the ROEs and everything that they produce and the cash on books, everything built together. That is why Asian Paints are at highs at the moment. Okay. So the thing here, Bharat, is that you have to hold on to it. That will also perform in the festive season. The whole paint space should do well with the oil now below $100 per barrel. Things should look good for the paint space as well. So Titan is another play, again not in retail, but another play just like Nika for this festive and wedding season. I think around 2300. If you get a chance to buy at 2300, 2350, very good levels to buy with the stop loss at 2100. I will not be surprised if it goes to 2800 or even 3000 over the next 6 months. I think the performance of Titan should be much better than what it has done over the last 3 years. So even if you look at 2019 performance, it should easily beat that. And that will give a lot of fillip to the stock price. I'm talking of December numbers, not September. So December quarter numbers compared to FY20 December should be much better. And remember, there was no pandemic until December of FY of 2019. So this is a pandemic free quarter. This will be hopefully a pandemic free quarter, and the same was in December 19. So we'll compare that, and I'm pretty confident that Titan will come out with very good numbers in there. So again, I think random gameplays. TCS is a very good buy at 3100, 3200. I don't see TCS going to 2800. It may go to 3000. But if you have more than 2 years time frame, TCS is a very good buy here. In 6 months time, I see underperformance from IT, so I won't say that in 6 months it will perform very well, but over a 3 year 4 year period this should do very well. So SRF on declines is a buy rather than at these levels. So whenever the market falls, SRF is a very good buy from a 1 year perspective as well. I would buy Varun Beverages, Ganesh, when the real season comes in. That's in late January, early February. Maybe I'll get a better price. At this point of time, I'll wait for the December numbers and then buy. I think it's a very good seasonal trade to take, and I keep on taking that every now and then. But now I'll not buy with such valuations, Varun Beverages. So Polycab looks extremely good at 24, 2500. It has moved up. So around 2350, 2400. I've talked about it to my premium members on YouTube, on Patreon, on WhatsApp, uh, to get into it. And now that it has gone up a little bit, wait for a market day, wait for some sort of a consolidation decline towards moving averages to buy into. Again, a stock that could be 3000 by the time Feb March comes in. I think it's a 3000 rupees stock, Polycab, in my opinion. So Relaxo is good, but again, Bata is something to really look at. Mirza International on major declines to look at rather than Relaxo, but even Relaxo should end up performing as with other paint companies as well. Yeah. All right, guys. Thank you. Thanks a lot for being online. Please like and subscribe my channel, hit the bell icon so you get my videos straight away when I post it. And kindly support me on Patreon. Thanks a lot for watching.